This week, energy company Enbridge agreed to sell a minority stake in 7 pipelines to a consortium of First Nations and Métis. That stakes are valued at $1.1 billion. It's a transaction made possible by a government agency backing the loans by the Indigenous groups. It's also a sign of how businesses and government will work together to try to change the economic relationship with Canada's Indigenous peoples. JP Gladu is founder of consulting firm Mokwateh and the former CEO of the Canadian Council for Aboriginal Business. Great to have you with us.
Thanks, Amanda. Great to be here.
So this feels pretty important, actually, and we've seen a few of these kinds of transactions. JP, what do they represent when we see these big players inviting participation by First Nations in the projects?
It is incredibly exciting, and it is the trend, and it is going to continue and get larger into the future. This represents certainty. Our country has struggled to attract capital. It's struggled to respond to global concerns around ESG and Indigenous issues, and this represents the Indigenous community playing a meaningful part from an equitable position to, meet the world's energy supply and demands and concerns. So this is incredibly exciting.
It was interesting to see in the announcement there was a suggestion that this sort of opens the door for more participation in future projects. Could you make the case that the corporate side of this, the oil and gas companies, are kind of buying participation and agreement from Indigenous groups that have to give approval in order for projects to go ahead? Is there a bit of an economic kind of, I don't want to use the term that's coming to mind, but is there a kind of a trade-off happening here?
Certainly there's sort of a trade-off, but, the oil and gas sectors, I think, largely understand that they can dig in and fight, any sector in the natural resources, or they can embrace this change and share in the equity and drive down construction costs and timelines and legal costs by ensuring the communities have a seat at the table. We're seeing this in the fisheries deal with Clearwater, and the East Tank project with Suncor not too long ago. This is the way of the future, and oil and gas companies, for the most part, are accepting this new reality.
We talk about the gaps. There's a prosperity gap. This kind of economic participation, obviously hugely important. But, JP, there's also a healthcare gap. There's an education gap. There are all kinds of other gaps for First Nations in this country. How does this change that? How does this help change the story going forward?
It's us on self-reliance, it's self-governance. Largely, communities are dependent on government funding, and they can only go into a number of pots, and the level of funding is not sufficient to support our culture, our language, health. This deal here, once the principal is paid down, these communities are going to be bringing in millions of dollars to their own coffers so they can make their own decisions. And that is a beautiful thing, to be self-reliant. And this is the way of the future, and if we talk about reconciliation in its truest sense, there's economic parity that needs to happen.
So we should expect to see more of this going forward?
Absolutely. I think any corporation, particularly that deals with land issues, this is just the way of the future. You develop your relationships, you build that trust, you define your values, and you march forward hand in hand with communities rather than bringing us in at the very end of a project idea. Of course, that's going to get shot down by our communities. And this is a really exciting development.
JP, great to talk to you about this. Appreciate it.
Thank you, Amanda. Great to be here.
JP Gladu is founder of consulting firm Mokwateh. Time for the takeaway and seeing the cost of a mistake in real time. The British pound took a wild dive this week, falling to record lows against other global currencies, including our own. That one of the oldest and most stable economies of the world would see such a run from its currency says something about the mood globally. Jumpy is not a bad word for it. But the reaction is also an example of what happens when a country takes the wrong turn. Like just about everywhere else, the UK is trying to get inflation under control. Its central bank is raising interest rates in an effort to cool spending by consumers and businesses. But along with parts of Europe, it is also suffering an energy crisis, with natural gas and electricity hitting record price levels. That's putting enormous strain on consumers there. The new Prime Minister, Liz Truss, is offering relief by way of tax cuts. The problem, of course, is that tax cuts of any kind right now will stimulate spending and counteract efforts made to cool inflation. It's an illogical move at best, but global market reaction is clear, and the message is one of very little trust in the government. To pay for the tax cuts means more debt. And with its currency plummeting and interest rates rising, that debt just got even more expensive, making it even harder to get its books in order if this UK government even has that in mind. The International Monetary Fund, which generally concerns itself with developing countries, implored the government this week to rethink its plan when it brings a full budget to Parliament in late November. The damage, though, may well be done by then. My takeaway, in this interconnected world, how we manage our fiscal affairs can have real-world implications, and they can be delivered swiftly. It's a good reminder that no country is an island, at least not financially. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.